let's shift our focus to the second management, Prestige Estates. My colleague Samina spoke to Chairman and MD Irfan Razack and began by asking about the recent 5,000 crore QIP and what it means for the company. Listen in to a chunk of that conversation.
We've raised this capital, and I always take it as a huge responsibility because raising capital is one thing, but that's the, as you know, you call it an easy part or the tough part, but the most important thing is the aspirations from the investors who have invested. They are having that confidence into us and seeing that we grow the company and we also produce the returns so that they also have growth on the investments. Having said that, now we've already spelled out what we're going to do with this money, because today money comes responsibility with responsibility, and 1/3 of this money will be utilized for pairing debt, and that we spelled that out in our DHRP. And the rest of it is 1/3 of it will be used for acquiring new properties, business development, and the rest of it will go towards our contribution to various SPVs where we are doing capex projects like office and retail and hospitality. So it will be a well-rounded utilization of funds. It just gives us more muscle, gives us that much more flexibility to do more business and grow the company from this level to the next.
So Razack, interesting, you're right. They've put their faith and confidence in you, not just because it's Prestige, but because you've time and again proved, you've not just beaten industry, but have been a phenomenally well-run company as well. So Razack, you talked about how some part of it will go into expansion, acquiring land banks, building more, creating more supply. Any specific geographies in your mind? I know you started with being a localized Bangalore player whose now spread his wings pretty much all over the country.
Yeah, this money will be utilized in various cities, including Bangalore. It's Bangalore, Chennai, it could Mumbai, NCR. These are the geographies that we are in. Also, we are looking at eyeing Pune seriously to do some residential development. We did do a office development there and completed it recently. And we've leased that out to the Bank of New York Mellon, and they are going to occupy that property very, very soon. They are fitting it out just now.
Talking about Pune, I believe your subsidiary Prestige Exora has already acquired some more land to the tune of 4.5 acres in Pune for 200 crores. You want to tell me what are the timelines here? What are the plans here? What is the deal that you have with the partner there? If there is a partner involved, a local partner?
This one, it is reported but misunderstood. This is the same property which I talked. Prestige Alpha, so Alpha Tech, that we had the landowner share where the landowner wanted to exit. So what we did is we bought off the balance share of the landowner, and the company now holds the entire asset 100% in its own name, and that has been leased out to Bank of New York Mellon. That's it. The reporting was correct, but the understanding was a little skewed. So it's not a new transaction. It is an old transaction which got fructified by virtue of us taking over the landowner share.
How much of this will contribute to your top line, and from when and up until when, Mr. Razack?
See, the entire asset is about 900,000 square feet. And since the property is leased, we do have a rent-free period with the tenants. And the revenue will kick in. And once the revenue kicks in, it will give us the rental income. There's no sale in this asset. We are holding that asset and utilizing it for rental income.
And I think that is seeming to become quite a primary objective for the group as well, right? You've talked about how you want to expand the annuity business. You want to give me a sense of, while you talked about how some part of the proceeds will be used towards that, anything that's close to fructification? And I know one thing is putting out an intention, the second is executing it and getting that cash flow going. But anything else that's on the radar on the annuity business side?
Yeah, there are several properties that we are developing on the office fronts, and actually approximately, I think, almost more than 20 million square feet of offices getting developed by us in geographies like Mumbai, Bangalore, also in Chennai. So these are properties which are not futuristic, but where we've tied up the lands and the approvals have come and where we are pouring concrete. And all these should fructify and get completed in the year 2028. And that's when the top line revenues will shoot up tremendously. So currently it's work in progress. So not only is the intent there, there is also the actual physical work that is going on. And now the only for us the major challenges is to complete these developments, to bring them to the market and get them leased out. In fact, we are also pouring concrete, another large development in Delhi Aero City, which has a component of 600,000 square feet of office, which has now been pre-leased, which is quite fortunate for us at good numbers. And also the largest hotel in the country with a big convention center and exhibition center, almost 225,000 square feet of convention exhibition space, with two hotels, which is the St. Regis Hotel and the Marriott Marquis. So these assets will get ready end of 25, but start trading in the beginning of 26. So it's a huge work in progress. There's a big ambition in all these plans, and but these plans are all should get fructified on the timelines we have planned for, and they should start yielding the company results.
Right, sir, just to quantify all of this, how much does commercial or office, hotel contribute to your top line today? And where would you like to see it by 2028? I know, I understand it's all work in progress, and hence I want to ask you your current, current revenues coming in from office, and what is the goalpost in 3 years?
With what we are just doing currently in the office, I believe we should end up by 28 with the top, if everything gets leased out, with a top line revenue of about 3,800 crores only on the office side. And similarly, we are doing retail. Retail is also about 11 million square feet of retail space is getting built over various assets. Even that should contribute around 1,100 crores. And the hospitality business today, we are looking at an NOI in 2028 with all the assets that are getting built at about 1,000 crores. So that is the overall game plan that is we are on at the moment.
And the journey of that has already been undertaken. Just to talk more about the building side of things, right? There has been, of course, a little bit of blip in pre-sales due to maybe delays in projects. Now, with the money that you're looking to raise, that you've raised, and some of it, of course, going towards projects, is it a fair assumption for me that you will use some of these QIP proceeds to speeden up upcoming developments? Any key projects in the pipeline for FY25 that you can share details about, where this money could be spent only to bring it to the market to deliver quicker than expected? Because we'd like to see those numbers reflecting on your top line.
Yeah, and you see what the thing is, the lands are already there. We've got in the pipeline where lands are tied up, plans have been done, plans have been locked in for approvals for to the extent of almost 60 million square feet, which will eventually land us up with 60,000 crores of top line. Now, this is not something future. This is already what we have in our pocket and what we can bring to the market. Now, where is the gap? The gap is that there is a huge approval process, and this process has its own timelines. And if I acquire any land today, to bring it to the market takes between 12 to 18 months. So we've been working relentlessly to see that all these projects come to the market and get launched. And once they get launched, then the entire churn keeps happening. Now, this QIP money which we have raised is for future to buy, invest into more properties so that the pipeline increases, because we just can't sit back and say, okay, I've got this pipeline and I have to keep fueling that pipeline to see that newer projects come in. So we have already listed out in our regulatory filing the list of properties that we are intending to invest in. And if those get invested, this money will get utilized properly.
Sir, currently, how many projects do you have on ongoing basis and how many under the planning stage?
See, at the moment, we are pouring concrete for 60 million square feet of space. That is all asset classes put together. And this is only growing. At some point of time, we may even grow to 70, 80 million. So that's a lot of work that is happening across the country. And there's a lot of responsibility also, because if I've done pre-sales of homes, I should make sure that they should be delivered within the timelines, within the specifications that we have promised, and then keep the aspirations of our customers intact. And that, again, what it does is it gives the confidence for new buyers. So that is where we've probably won the game in some way, because the type of revenues that we've got currently and which are growing, it's only because of the current confidence the buyers have in us because of whatever deliveries we've done in the past. And then we can't let up. We have to keep at it, and we have to make sure that we keep delivering, so that it should be business. It's not an easy business that we are in. It is the most difficult business, but we are glad that while we are doing what we are doing, we are building homes for our customers, and at the same time, we're creating wealth for them.
Interesting. It is a tough business to be working in, and of course, now that you're also, you've been an equity listed company, it makes it doubly harder. Mr. Razack, what are average realizations across the board for Prestige Estate, and where do you see that over the next 1 to 2 years?
See, currently now the average realizations have gone up, if you take an average, because we also operating in a geography like Mumbai. So I think it's around 11,000 rupees today in the last quarter. That's a number that I remember. And these realizations are a sort, we don't want pricing to go up too fast, too soon, because then if we breach the unaffordability barrier, again, we get set back. We have to do the balancing trick. We have to see that we get land at proper pricing. We have to be efficient in our construction pricing, and we have to protect the bottom line of the company. It's a big juggle that we have to do, and offer the product at a sensible price to the consumer. Because if the price goes up too soon, too fast, again, the flavor will be lost, and the consumer will have to start thinking whether they should commit to buy. So it's a tough one, but we have to balance it that way. I don't know, just this is only India peculiar, where the land property prices have always been going up and up. There's no relenting on it, but we are very sensitive to this, and we definitely don't want to see that the prices run up too fast.
How are sales doing right now? Because there are mixed signals coming, especially from states like Maharashtra, right? So while there are some properties that are seeing or selling out on opening, there are others that have been lagging behind significantly. Could you give me a sense of what the on-ground picture is? Is it looking much better today than it looked maybe at the start of this year when there was so much of euphoria around real estate?
Any sales are doing very well. Now, it all depends on what type of product you launch and where your location is. If you're targeting the mid-income, whichever city you're in, now the mid-income definition changes from city to city. But then if you're targeting the mid-income group, I believe that you are launching today and the product gets lapped up almost immediately. But if you're targeting the luxury market, luxury, I always say it's a niche market, and that is a very high ticket item. Things will sell, of course they will, and today the market is even good for that. But then it just doesn't get sold overnight. People have to think, rethink, and take a decision. But the good news is, today all segments are selling. But I don't get too overexcited in the luxury segment, because there is no need over there. Basically, it's somebody who has a requirement, and then who will have to take their time in deciding, and then the commitment. But the mid segment is where it's evergreen, and if we get the pricing and the location right, we can have sellouts as we launch.
You know, Mr. Razack, most people, I mean, some of your peers, right, and of course individuals as well, after the golden visa, we've seen a lot of Indian real estate players foraying into markets like Dubai. Now that you're sitting on a little bit of a pile of cash, opportunities are there, but they come at a price tag in India. Is that a plan? Is that something you've thought about? Because I'm pretty certain you would have pen to paper on going global or going to Dubai, if nowhere else.
No, we have no such thoughts or plans. We are very much an Indian company. We'd like to remain that way. And we have a big job in our country to do. And we'd like to be here and do our job here. We'll leave it to the rest of the whoever wants to do in whichever part of the world. But we are pretty happy doing work in our country.
Very lastly, and I know we've talked about this in the past, but it's quick, short on time, so I'll quickly take this with you. I know there was some margin pressure because of your legacy projects that you still had to furnish and, of course, deliver because cost of raw materials have gone up. Is that now behind Prestige Estates?
No, the accounting system itself is a little lopsided. It is a little flawed because we have to account based on the completed method. The revenue gets recognized only when the project gets not only completed but handed over to the customer, while we have to keep meeting the expenses. Now, if I'm doing large projects, my overheads are going to increase exponentially. But these overheads, not the construction cost, but the overheads, these will be debited to my P&L account quarter on quarter, year on year. But we will see the benefits of this debit only 3 years, 4 years later when the project gets completed and handed over. So this is called the Ind AS accounting system. Just about 5 years ago, it was on the percentage completion method. Now it's switched on to the 100% completed method, where not only the project has to get completed, but also get delivered to the customer. So it's a little back-ended, though the expense is front-ended. So you'll find that thing. So it's very difficult for even an analyst to really find out exactly what the company is doing in terms of profits. On the face of it, you'll say one quarter the profits are low, another face of it, you'll say profits are high. But that's not the reality. I think the real way to look at profits for real estate companies, if you're doing the completed method, is to look at the top line revenue that has happened and the budget for construction. You'll get the numbers. But those are all hypothetical numbers that somebody can get. But the reported numbers are the facts that are there, and that's the way it'll be as we go along, unless the system changes again.
Right, so that was Mr. Irfan Razack, management of Prestige Estates, who's told us in detail as to what the fundraise means for the company. But with that, it's a wrap on the small and mid cap show. Keep watching NDTV Profit for more news and updates.